지금부터는 노스웨스트준주의 순서로 넘어가도록 하겠습니다. 먼저 첫 번째 발표자는 노스웨스트 테리토리 지올로지컬 서베이의 치프 지올로지스트 스캇 케인스님의 발표입니다. 스캇 케인스님은 30년 이상의 경력을 보유한 지질 전문가로 현재는 캐나다 정부 산하 노스웨스트 지올로지컬 서베이의 수석 지질학자로 근무하고 계시고요. 노스웨스트 준주의 지질 매핑 및 지질학 연구 등을 총괄하고 계시다고 합니다. So ladies and gentlemen, now let's move on to the Northwest Territories. First of all, we will begin with the Chief Geologist, Mr. Scott Keynes of the Northwest Territories Geological Survey. So he's a professional geologist with more than 30 years of experience in industry and government positions. As the Chief Geologist of Northwest Territories Geological Survey, Mr. Keynes specializes in regional geological mapping and geoscience research. So, ladies and gentlemen, let's turn our attention to Mr. Keynes. So, if you're ready, the floor is yours.
Thank you. Thank you. Hopefully you can see my screen here. Thanks for the opportunity to talk to you about the NWT's mineral potential. The information in this presentation is compiled from public sources and believed to be accurate, but investors should confirm the information from the source before making investment decisions. Now, the Northwest Territories has a landmass of over 1.1 million square kilometers, and most of it is remote and has been poorly explored by modern standards. Because of this, there are still large discoveries to be made. We have a varied geology and thus host a varied array of mineral deposit types, including rare earths, critical metals, energy metals, battery metals, gold, and diamonds. And there are a lot of opportunities for continued exploration and investment. Different geological provinces have different mineral endowments, and the Slave Geologic Province is an ancient Archean terrain shown here in pink. It's endowed abundantly with gold, diamonds, and other minerals. The Bear Province, slightly to the west, is an ancient accretionary terrain, hosting IOCG-type deposits, silver, and uranium. These are examples of the different endowments and different types of in the different terrains. I'm going to use my 10 minutes here today to highlight a few of our more advanced exploration properties that may be of particular interest to this group. I'll start the presentation off talking about Nechalacho and Nico deposits because I heard they may be of particular interest. Nechalacho is located in the Southern Slave Province here, that's the orange dot. It's an alkaline igneous complex hosting many rare earth, critical metal, and battery metal resources. Nico, shown in red here, is an iron oxide copper gold deposit hosting cobalt, gold, bismuth, and copper resources. It's located in the Bear Geological Province. We're going to get treated to more detailed talks about these later in the day, later this morning. I'll talk about Nechalacho first. Ownership of the Nechalacho property is split. Vital Metals controls 100% of the project above 150 meter elevation, and Avalon Critical Metals retains ownership of the property below 150 meters. The Nechalacho upper zone has a JORC 2012 compliant global resource of 94.7 million tons at about 1.46% rare earth oxides. The global resource includes several discrete zones, including the North T and Tardif zones, which I'll talk about a little bit more. Now, the North T resource is calculated a small resource of about 100,000 tons, but at 9% light rare earth oxides measured and indicated. And Vital has initiated mining this very high-grade North T zone. The first blast opening the new pit was announced May 12, 2021. Ore will be crushed on site to gravel size and fed through an optical sorting machine to separate the bastionite ore minerals from quartz gangue, and the concentrate will then be shipped to Saskatchewan and Europe for processing. Phase 2 of the Vital Metals project envisions mining of the Tardif zones to the south here. The Tardif zone contains measured, indicated, and inferred resources of about 3.2 million tons, grading about 2.378% rare earth oxides. The Tardif zone is currently being drilled with encouraging results. Jeff is talking later this morning, and he'll give you a lot more information on Mechalacho. Move over to Nico. Nico, in the red dot here, is an iron oxide copper gold deposit in the Bear geological province. Now, whereas many NWT mineral deposits suffer from a lack of infrastructure, Nico is benefiting from the expansion of the government road network from NWT Highway 3 up to the community of Wati. They'll be fairly close to that road, their mine located here. Also, proximal to their deposit is the Snare Hydroelectric Dam, so it's sited in a very fortuitous place. Most recent technical report by Micon Engineering details development of a high-grade underground mine to provide capital for building a larger open pit resource. And the most recent reserve from the Micon report estimates combined underground and open pit reserves at about 33 million tons of gram per ton gold, 0.11% cobalt, 0.14% bismuth, and 0.04 copper. The high-grade underground resource will assist capitalization of the larger open pit. You can see the numbers on the underground resource here have quite a bit higher grades. The project has been through an environmental assessment and is permitted for mining. And Robin Goad is going to speak a lot more and provide a lot more information on the deposit later today. I'd like to move on to briefly mention some other NWT projects. First, base and strategic metals, advanced deposits in the Northwest Territories. In the south, in the Northwest Territories interior platform, represented by this blue dot at the south, is Osisko Metals Pine Point deposit. The Pine Point mine was a large past producing zinc lead mine. Osisko has a recent technical report showing a net present value of about $500 million using an 8% discount for a return on investment of about 29.6%. That's based on a mineral resource estimate of about 52 million tons, grading 4.64% zinc and 1.83% lead. Definition and exploration drilling are continuing on the property. Now, the Howards Pass mine straddles the Yukon NWT border in the Cordillera. It has about 15 SEDEX style zinc lead deposits in it, and it's owned by Selwyn Chinghun Mining. It has a global indicated mineral resource of 185 million tons, grading 5.2% zinc and 1.79% lead, and a large inferred resource as well. Also in the Cordillera, the Perry Creek mine is owned by Norzinc Limited, and it's received its final permits for road and mine construction. It has a reserve of 8 million tons at 8.6% zinc and 8.1% lead, as well as 3.6 ounces per ton silver. It also has a large resource. The reserve is entirely hosted in a large continuous quartz vein, and stratiform and stockwork mineralization are also present, but not included in the reserve statement. Norzinc is seeking to raise financing to proceed with construction. Also, the Mactung and Cantung mines are two large high-grade tungsten deposits straddling the NWT Yukon border. Cantung itself is a past producer and boasts a 2014 mineral reserve of 1.8 million tons at 0.81% tungsten trioxide, as well as an indicated reserve of 33 million as well as an indicated resource. Mactung, to the north, has a probable reserve of 8.5 million tons of just over 1% tungsten trioxide and an indicated reserve of 33 million tons at 0.88% tungsten trioxide. And these properties are currently being sold by request for proposal by the governments of Canada and the Northwest Territories. Okay, I'd like to talk a little bit about gold, the Northwest Territories' three most advanced gold projects. The Indian Lake is owned by Nighthawk Resources. It's a series of gold deposits associated with the Indian Volcanic Belt. Most of the resources are associated with the mineralized dike at the past producing Holomac deposit. It has a global indicated resource of 38.7 million tons at 1.81 grams per ton gold. The Yellowknife City Gold Project, where my hometown is, and also home to the past producing Con and Giant gold mines. Goldterra last quoted a total inferred mineral resource on their properties of 24.3 million tons at 1.54 grams per ton gold from a host of deposits on the property. And drilling continues on this. Finally, I'll mention Courageous Lake project of Seabridge Gold Corporation. This has proven and probable reserves of 91 million tons, grading 2.20 grams per ton gold. The reserve is defined from a resource of 107 million tons, grading 2.31 gram per ton gold measured and indicated. No discussion of the NWT's mining opportunities and mineral opportunities would be complete without mentioning diamonds. The Slave Geological Province hosts 3 operating diamond mines, Ekati, Diavik, and Gachagwe. Ekati is a mature diamond mine with a number of large resources available to continue operations. They're currently expanding the operation to develop Point Lake pipe in anticipation of developing several other large resources on the property, including the Lynx and Jay kimberlites. Diavik Diamond Mines, next door to them, is co-owned by Rio Tinto and Dominion Diamond Mines Diavik Limited. In 2020, they produced 6.2 million carats of diamonds from 2.5 million tons of ore, and they're producing from 4 kimberlites, with reserves of 10.5 million tons, grading 2.4 carats per ton. Pardon me. Gachagwe, further to the south, is owned by De Beers Canada and Mountain Province Diamonds. Last reported their reserves standing at 29.7 million tons at 1.5 carats per ton in December. And that's in 3 kimberlites, 5034, Hearn, and Tuzo. Now, several other kimberlites have significant diamond potential in the immediate vicinity of all 3 of these mines. There's my contact information should you want to get a hold of me, or of course through CORS and Canmore. Thank you very much for your time today.
Thank you very much, Mr. Keynes, for your presentation. 이어서 두 번째 발표를 소개해드리겠습니다. 두 번째 발표는 포춘 미네랄 리미티드의 프레지던트이자 CEO이신 로빈 고드님께서 발표를 해주실 텐데요. 오늘은 유망 코발트 프로젝트에 대해서 소개를 해주신다고 합니다. 로빈 고드님은 노스웨스트 및 온타리오주 전문 지질학자로 40년 이상의 광물자원 탐사 및 개발 경력을 보유하고 계시는데요. 과거 30년 이상 테크 리소스, 노란다 인코퍼레이션 등 다양한 기업에서 근무하시면서 베이스 메탈, 귀금속, 산업광물, 석탄 등 각양각색의 광종을 다루셨고요. 현재는 포춘 미네랄스 리미티드를 창립해서 대표로 재직 중이십니다. 자, 그럼 영어로도 소개를 올리겠습니다. Now we would like to introduce the industry presentations, and we will begin with Fortune Minerals Limited's President and CEO, Mr. Robin Gold, who will be introducing to us the NICO Cobalt project. Mr. Robin Gold is a professional geologist of the Northwest Territories in Ontario with more than 40 years of experience in exploration and development of mineral resources. And over the past 30 years, he has worked for a variety of companies, including Tech Resources, Noranda Incorporation, dealing with a variety of minerals, including base and precious minerals, industrial minerals, and coral as well. So ladies and gentlemen, please join me in welcoming Mr. Gold.
감사합니다. Thank you, and 안녕하세요. Good morning to everybody in Korea. I hope my screen is going to be behaving. So I'm going to be giving you a project update on NICO, and this is a good segue from Scott's earlier presentation. So this is a very advanced shovel-ready project to produce cobalt, gold, bismuth, and copper from a vertically integrated development. I will be showing some forward-looking information and just wanted to make you aware of that. And you should now be seeing a slide basically entitled Canadian Critical Minerals Project. So this is a very advanced shovel-ready project with good project economics, opportunities for improved economics, and very good environmental social groundwork already done on the project. And this will be a vertically integrated Canadian project to produce important critical minerals, particularly cobalt and bismuth, as well as a little bit of copper and a 1 million ounce gold co-product. I'm just going to give a very brief summary of the project. First of all, we're located in the Northwest Territories, which Scott has already shown you, but there's a map of Canada, and the Northwest Territories is shown highlighted in gold. We're also now looking at an inset map around Great Slave Lake, and it's important to note that the Canadian National Railway terminates on the south shore of Great Slave Lake. And then the larger inset map, you'll see the area around the NICO project, which is, Scott has already mentioned, we have a new road, which is a key enabler for our project. I'll be showing images of that. And the two projects we have, which are both IOCGs, NICO and also the Soudayan copper satellite deposit. Fortune Minerals is a Toronto Stock Exchange listed company. We have a proven management team. We own our project 100%. There are no outside private royalties other than government royalties. A very advanced project. We spent $135 million to date. It's a primary cobalt project, which is a little bit unusual. 1.1 million ounces of gold and 12% of global bismuth reserves. It's the biggest bismuth deposit in the world, even though it's only the third most important metal in the deposit. As Scott's already mentioned, we have a 33 million ton, 20-year mineral reserve. We've already conducted test mining and pilot plant processing. We've completed an environmental assessment, and we have the major mine permits. We've already conducted a feed engineering study, a positive feasibility study, and we plan to update that study with some of the recent optimizations which we've carried out to date. Going to introduce, first of all, the commodities that we're going to produce. So cobalt and bismuth are identified on the South Korean, United States, EU, and Canadian critical minerals lists. And just a few months ago, Canada came out with its own list, which also included copper in addition to cobalt and bismuth. And we sort of subscribe to the US definition of critical minerals having essential use in manufacturing and defense industries, not easily substituted by other metals, and the supply chains are at risk, typically because of geographic concentration of production or geopolitical issues. So we will have a 20-year mine life using the current mineral reserves, producing 1,800 tons per year of cobalt, 47,000 ounces of gold, 1,700 tons per year of bismuth, and a little bit of byproduct copper. And our primary cobalt product will be a cobalt sulfate heptahydrate. That material is, of course, the material that is used to make most lithium-ion batteries, particularly the batteries used in electric vehicles. I won't go into too much detail about the cobalt market. It's about 150,000 tons, and most analysts would agree that it's going to somewhere between double and triple by the end of this decade, primarily on the back of its use in batteries and reflecting that transition of growth from NiCad batteries through to nickel metal hydrate batteries to today's lithium-ion cathode chemistries. And while battery consumption consumes about 64% of cobalt production, it's also used in other important applications, including superalloys, magnets, hard metals, pigments, and catalysts. And where the consumption is quite well recognized, the big challenge with the cobalt market is where it's currently sourced. 70% of mine production coming out of the DRC or the Congo. More than 50% of that mine production is controlled by Chinese state-owned enterprises. 64% of refinery production is also controlled by China, as well as 80% of cobalt chemical supply. In addition to the sort of the geopolitical risks associated with the production, we believe that the next sort of phase in battery reduced cost for the electric vehicles will involve geographical siloing. So we'll have more production of the metals and the applications and the manufacturing all happening within the same general areas. Just want to look a little bit on the projected growth of batteries as well as electric vehicles. The histograms on the left-hand side of the screen show the historical use in generally portable electronic devices, and the much greater use that's about to happen is primarily on the back of electric vehicles and stationary storage. And whereas 10 to 25 grams of cobalt is typically in a cell phone battery, a car battery contains anywhere from 4,000 to 20,000 grams. More than 200 battery megafactories all over the world. About half of those are in China, and a number of them also important Korean companies, including SK Innovation, LG Chem, and Samsung. I'm going to talk a little bit about bismuth. We are the largest bismuth deposit in the world with 12% of global reserves. Market's about 20,000 tons, but growing primarily as an environmentally safe and non-toxic replacement for lead. The current use is primarily in the automotive industry for windshield and glass frits. Those are the little black dots around the perimeter of the windshield of your car, which are leveraging the high density of bismuth, but also being one of the very few metals which expands when cooled. So if you want to produce a dimensionally stable alloy or compound, bismuth is one of the very few metals that you can do that with. It's also used in anti-corrosion coatings in the automotive industry, as well as pearlescent and certain pigments for paint. And as I mentioned, the big growth area right now is non-toxic replacement for lead in solders and brasses used in the plumbing and electronics industries, as well as free machining steel, ceramic glazes, and lead-free voltaics in solar energy as well. We're now going to focus in on the project. Scott has already mentioned that that key enabler for the project is that $200 million government road to the community of Wati, which is, if you can see my cursor, is shown right here. That's a $200 million road. Is an image of the construction from last year actually shown here. And that road will open to the public later this year. We're also very close to hydro, but insufficient hydro available right now. So we're going to use mine startup using LNG. The reserves are hosted in 3 gently dipping stratabound lenses. Each of those lenses is up to 70 meters in true thickness, and you can see the pit shell configured around the current ore bodies, and the lower zone in red, the middle zone in blue, and the upper zone in green. These are IOCG type mineral deposits, which have global analogs like Olympic Dam with 8.3 billion tons, and clusters of mineral deposits occurring in other districts like Carajás and Candelaria in Chile. All of these are typically over 1 billion tons, and we think there's enormous exploration opportunities outside of the known mineral reserves and the satellite copper deposit that we have. The mineral reserves have already been summarized by Scott, but there are 33 million tons containing 1.1 million ounces of gold, about 37.3 million kilograms of cobalt, 46.3 million kilograms of bismuth, and 12.3 million kilograms of copper, primarily in open pit mineral reserves, but we do mine a little bit of high grade gold rich material early in the mine life to accelerate the cash flow and produce a more attractive rate of return for the development. A lot of work has gone into process and deposit validation, which includes test mining. We have a decline ramp, more than 2 kilometers of underground workings have already been completed, verifying the geometry and the grade of the deposit, the mining conditions, and we've collected large samples for pilot plant processing, which has proved the process flow sheets, the metallurgical recoveries, and we've also been able to make products which have been shipped to potential customers all over the world. The most important thing to understand from the process side of things is a very low mass pull or high concentration ratio. So where we process ores at the rate of 4,650 tons of ore per day, we reduce that to only 180 tons of concentrate containing the recoverable metals. And that allows us to be able to ship that material at relatively low cost to a refinery. And the downstream processing, which is typically more expensive, is happening on only 4%
Mr.
of the
Goad?
original mass of the ore. I'm over time.
Yes, sir. Sorry for the interruption, but
No,
due to
no
limited
problem.
time,
So
yes.
just railroad down to Edmonton, where we plan to produce the new refinery, where we have low-cost power and a skilled commutable labor pool. We use autoclave processing at the refinery, and we've already done a feasibility study showing attractive rates of return over 20% with net present values in excess of $500 million. A number of optimizations have been done recently to improve project economics. The most important one is a new refinery site, which will be announced shortly, and good ESG groundwork for this project. So 감사합니다. Thanks very much, and thank you for, if anybody would like to hear more about our project, please reach out to us and we can have a more detailed conversation. Thank you.
Thank you so much for joining us today and also sharing your words. Thank you. 이어서 세 번째 발표를 소개해드리겠습니다. 세 번째 발표는 치타 리소스의 매니징 디렉터이신 지오프 애킨스님께서 준비를 해주셨는데요. 오늘은 유망 히토류 프로젝트에 대해서 소개를 해주신다고 합니다. 먼저 연사에 대해서 잠시 소개를 드리자면 애킨스님은 20년 이상 광산 및 인프라 산업 분야 기업 개발 그리고 운영을 해오신 전문가이십니다. 특히 히토류 광산 운영 및 개발 분야에 많은 경험을 갖고 계시다고 하는데요. 잠시 뒤에 만나보도록 하겠습니다. So, ladies and gentlemen, we'll conclude our presentations from Northwest Territories with a presentation from Cheetah Resources Managing Director, Mr. Geoff Atkins, who will be introducing a promising rare earth opportunity. Mr. Atkins is an expert in industrial development and operation across the mining and infrastructure industry for more than 20 years and brings with him a wealth of experience, especially in operations and development of rare earth opportunities. So, ladies and gentlemen, please join me in welcoming Mr. Atkins, and if you're ready, the floor is yours.
Thank you very much, and I'd like to welcome everybody to the webinar. As discussed, my name is Geoff Atkins. I am the Managing Director of Cheetah Resources and also our parent company, Vital Metals. Vital Metals is a Australian listed company. We just have our usual disclaimer, and we are focused on the development of rare earths. Of particular interest for us is the Nechlacho project, which, as Scott mentioned earlier, is located on the Great Slave Lake up in the Northwest Territories. Our focus is on rare earths, and it is on delivering and achieving operations in the shortest possible time frame. As a company, we have a lot of experience in the development of rare earths, with our entire management team having come out of Lynas from about 2005, 2007. Not only do we have the Nechlacho project, but we also have rights to the Wiyu Hill project in Tanzania. As mentioned, our management team is all very experienced in developing rare earth projects. I've spent time at Lynas as corporate planning manager from 2007. Tony Hadley, our chief operating officer, was the general manager of the Mount Weld project before moving on to Northern Minerals, where he operated the Browns Range project. Matthew Edler worked on the Malawi project in Kankunde, and Ray Angulov, our Canadian operations manager, was the senior metallurgist at Northern Minerals for the Browns Range project. So we have a great deal of experience, not only in developing rare earth projects, but also in operating them. The project itself, as discussed, is located up here in the Northwest Territories. The plan will be to mine and beneficiate the product there before it will be transported down to Saskatoon for further processing. At Saskatoon, we will produce a mixed rare earth carbonate product, which will then be shipped to separation facilities and to end customers. Having that plant in Saskatoon is an ideal location then for us to transport our product either to Europe, North America, or across into Asia. The principle of Vital Metals is to take all of the lessons that we've learned as a company and as individuals in the operation of rare earth projects to ensure the successful development Netchalacho. And the approach that we are taking there is to go through a series of stages rather than just try to develop a single large project initially. We're actually understanding the complexities of rare earths and the need to go through a customer acceptance process. So therefore, we're commencing with our startup operation at the North T project, as Scott mentioned, before moving down to the Tardif project, which is where we will have our long-term operation. Also, we're also building in the capability of future expansion from there with other projects such as William Hill. The way that we are able to deliver this is through the unique metallurgy at Netchalacho. If you have a look where my cursor is here, the key to our ability to develop this project is the fact that for beneficiating North T product, it is simply a case of separating the red from the white. And we're able to do this using ore sorting. From there, we go back with similar metallurgy with Tardif. And this is one of the things which is key, is that the rare earth minerals at Netchalacho, which we are targeting, are contained within a bastnasite mineral. And that is really one of only the two mineralizations that have been commercially developed to produce neodymium and praseodymium, the key rare earth minerals. I'll provide a little bit more of an overview now of Netchalacho with what we are doing. As Scott mentioned, we are located on the Great Slave Lake, and it really is a unique environment up there. By being located on the Great Slave Lake, it opens up the possibilities of both ice roads in the winter, and then also barge access in the summer. And that takes us directly down to Hay River, which is the location of the Canadian Railway, which will then take the material down to Saskatoon. As mentioned, Netchalacho consists of two main zones. You've got the T zone, which is where our startup operation is, before moving down to the larger Tardif zone. T zone is one of the highest grade deposits, and it does make it absolutely ideal for this startup operation, especially when you couple it with the metallurgy that we have. And then, as you can see, the Tardif zone is significantly larger, with well over 1 million tonnes of contained rare earths within that deposit. So that will provide significant growth. Our initial targets will be Tardif zones down here, which are a high grade area. And our target there will be to have that entering production in 2025. Of most interest, though, is North T at the moment. We signed a mining contract with Detont Show Nahani Constructions Limited, a local Indigenous company, and they have commenced mining operations. From these photos, you can see these photos a couple of weeks ago. We have our pit mining underway. Our ore sorter is in place and being commissioned. We expect first concentrate to come off the site in the northern winter to be delivered down to Saskatoon by November. First feed from our extraction plant in Saskatoon is scheduled to occur by the end of the year, with first product being delivered next year. At Saskatoon, we will produce a rare earth carbonate. From our test work, we have produced approximately 12 kilograms of carbonate, which has been sent out to prospective customers, or some prospective customers. Of note, we are also going to be located adjacent to the Saskatchewan Research Council, who are currently building a rare earth separation plant. However, in the first instance, we have signed an offtake agreement with Retec, who are a Norwegian company. That offtake agreement will be for 1,000 tonnes of contained rare earths, excluding cerium, for an initial period of 5 years. However, the option is to increase that over up to 5,000 tonnes per year for a period of 10 years. I will note, however, that we are maintaining capacity for additional offtake agreements. And as mentioned, with our location, we're ideally placed to supply facilities either through Asia, North America, or Europe. Our focus is very much on providing and guaranteeing that supply of raw materials to customers outside of China. One of the key things for the Tardif Zone, which is going to ensure the success of our company, is that mineralogically, Tardif is very similar to the North T. So this means as we expand our operation at North T, we will be able to leverage off that work and the process plant as we build this larger project. We have completed test work which has confirmed that the North T deposit is amenable to the same processes as North T. The only difference is probably that due to a slightly finer grain size, we will add one additional step of beneficiation. But the key to that is that enables us to fast track our development timelines and means that a targeted commencement date for this larger operation by 2025 is very realistic. One thing which is of great importance to us is building our northern team. We might be an Australian company, but the operation at Netchalaccho is managed locally, and we're very proud of that our team is built is majority Indigenous and Northern resident. That is in addition to the fact that our mining operator is a Northern Indigenous company. And that's something which, as a company, we're extremely proud of. Understanding we're coming up close to the time, just very quickly, as mentioned, we will also be building in the capacity for further growth. Our focus is really to ensure that we have the flexibility to continue to expand our operation and to supply and to meet the demands of end users for rare earths. And for that means building in a second project. I won't go into the details of Wigoo Hill, but just to say that we are planning for the future and to ensure that we are able to meet future demand. And I think that brings us just about to the end of the 10 minutes. In summary, just like to thank you for your time. We are very proud to be on track to be the next rare earth producer. Our mining operations have commenced, and I'm also proud to be able to say that all of our plans which we've established over the previous 12 to 18 months we've been able to meet those targets, and we're on track to also expand our operation going through 2024, 2025. And really to ensure that we are able to guarantee the supply of rare earth feedstock to end users throughout the world and ensure that we have that diversified supply chain. So thank you very much for your time. And if anybody has any questions, would like to get in contact, here are my details.